Hello, everyone. Welcome back to the channel. Today, we're talking about crypto market structure, one of the most important concepts in trading. Before indicators, before strategies, before bots, you must understand how price moves. Market structure answers questions like, is the market bullish or bearish? Are buyers or sellers in control? Should you look for buy setups or sell setups? If you master market structure, everything else becomes 10x clearer. What is market structure? Market structure is simply the behavior of price over time. Price moves in waves. It goes up, it goes down, it pauses, then it continues or reverses. These movements create highs and lows, and those highs and lows tell a story. In crypto, market structure shows us trend direction, strength or weakness, possible trend reversals. Important. Market structure works on any time frame. 1 minute, 15 minutes, 1 hour, 4 hours, daily. The rules stay the same. The building blocks, higher highs and lower lows. Everything starts with 4 key concepts: higher high, higher low, lower low. Let's break them down. Higher high. Price goes up, then goes up again higher than the previous high. Shows buyer strength. Higher low. Price pulls back, but stays above the previous low. Buyers are defending price. Lower low. Price drops, then drops again lower than the previous low. Sellers are in control. Lower high. Price bounces but fails below the previous high. Weak buying pressure. These 4 ideas are the language of the market. Bullish market structure. A bullish market is defined by higher highs and higher lows. Sequence looks like HH, HL, HH, HL. What does this mean? Buyers are stronger than sellers. Pullbacks are opportunities, not danger zones. The trend is up. In bullish structure, you do not chase tops. You wait for pullbacks. You look for buy opportunities near higher lows. Even when price drops temporarily, structure stays bullish as long as higher lows hold. Bearish market structure. A bearish market is defined by lower lows and lower highs. Sequence looks like LL, LH, LL, LH. This tells us sellers are dominating. Rallies are weak. Price is likely to continue down. In bearish structure, buying is risky. Rallies are often sell opportunities. You trade with the trend, not against it. Trying to buy in a bearish market without confirmation is one of the biggest beginner mistakes. Market structure break. Now, let's talk about something powerful. Market structure break. A structure break happens when price violates the current trend, bullish to bearish. Price fails to make a higher high, breaks below the last higher low, possible trend reversal. Bearish to bullish. Price fails to make a lower low, breaks above the last lower high. Buyers stepping in. Important. A single candle doesn't change structure. Structure breaks need confirmation and context. Think of it as the market is telling you something has changed. Consolidation and ranges. Sometimes the market is neither bullish nor bearish. This is called consolidation, range, sideways market. Price moves between a clear high and low without creating HH or LL. In ranges, breakouts matter. Fakeouts are common. Patience is key. Most big moves start after consolidation. Why market structure matters in crypto? Crypto markets are volatile, emotional, news-driven. Market structure helps you avoid emotional trades, trade with logic, stop fighting the market. Instead of guessing, is this coin cheap? You ask, what is the structure telling me? Structure greater than indicators. Final tips for beginners. Before we end, remember this. Always identify structure first. Trade in the direction of the trend. Zoom out. Higher time frames matter. Don't force trades inside choppy markets. If you learn only one thing in trading, learn market structure. Outro. That's it for today's lesson on crypto market structure. If this helped you understand the market better, make sure to like, share, and subscribe. In the next lessons, we'll connect market structure with support and resistance, liquidity, and smart money concepts. See you in the next one.